Good evening all. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and I am really late. It's almost 8 o'clock. I like to get these done around 6, so I'm 2 hours late tonight, and I apologize for that. Today, by the way, is Monday, the 17th of August, 2020. So we had a big up day in stock markets, and they're following through in the futures tonight. So if that follows through, the question is, can we get some breakaways in some of these markets? XLK, you have a gap here that hasn't been filled, and you're at an area that, let's assume we wake up in the morning and the QQQ is up sharply. You could gap over this number, and this is the number you'd be watching right here at 115.57. If you were to gap over it, the key word is gap over it. It's $1 higher. I'm not saying it's going to happen. You could have what's called a breakaway and then the makings of a runaway, and you start moving quickly to the upside. Algos, they program some of this stuff in. Not all of them, but some do. You know, all that an algorithm is a summation of ideas. It's a math formula with different variables that you're putting into it. So don't get that scared by it, but they'll be looking at that, and so would I. This drive down just didn't fill that gap, so that to me is still a bullish scenario. When I look at XLK, we've had a pattern of lower highs and higher lows. If you take out 114.91, you then reinforce, you've got the higher low. That would give you the higher high, and you're back in an uptrend until 113.25 is taken out. Don't take that out, and you still got the pattern of lower highs. But then if you were to just take that out and not take out 114.91, you could end up with lower highs in the beginning of lower lows. That could set you on a pace back to 111.13. So I think we're at a very interesting point in the market. The market's got upside bias with the swing line down. The resistance is 118.07 on the Bollinger Band. Remember, 95% of the time, if the market hits the band, it's going to stay within it. And that's how I look at it. It doesn't have to hit it. It just stays within it. So that's still a resistance point for me. And momentum, well, momentum is interesting here. Both numbers closed over 80 today. Both numbers were over 80 on Friday, and both numbers were over 80 on Thursday, the day before as well. You weren't here, which was last Tuesday, but that's embedded. And in an embedded reading, it tells me that on these pullbacks, the pros are buyers looking to see if they can drive the market up, often to a Bollinger Band or a window envelope. If you don't know what a window envelope is, you might want to join our afternoon SPDR ETF videos where we teach it, and it's taught in my charting course. And it's a standard deviation away from the center line, the 18-day average of closes. You have to determine where you want that deviation. I have a way where I do it for all my subscribers each day. So those would be the numbers that could be in play. When I look at SMH, bullish. You've got higher lows, higher highs, resistance, 176, the upper Bollinger Band. When I look here, both numbers over 80, both numbers on Friday were over 80, and on Thursday. You're embedded. So until the red lines turn down, I'm looking for further attempts at pushing to the upside. Lose that upside momentum and my whole game changes. In XLI, still bullish. Higher lows, higher highs, embedded reading that has not been lost. To lose it, the red number has to close under 80. Upside target after hitting the upper Bollinger Band for a series of 4 or 5 days, now down, and if you can hit it again, you're right back into that area where you keep driving to those numbers. On the energy sector, it's very similar to the futures. If you look at Brent or WTI crude, you are in what I call a pipe. You don't know if this is a base or a top that is formed. It's long in duration and very narrow in the volatility that it's had. I'll let the market break out of that and tell me what it is. You reinstated the bull market in QQQ, I think. Take a look. What's here? Both numbers over 80. Both numbers over 80. Both over 80 on Thursday. So I realize we've been in an overall bull market, but the bull market and the slow stochastic had backed off. And the market made one run at the 18-day average, held the zone very nicely. It's come back and it's re-embedded. So it's joined the parade of the other markets that are saying momentum is locked into the upside. Same in the emerging market? Well, not really. If we take a look here, both numbers were over 80 today, not the day before. You're just overbought. Overbought, better plays out there than this. That's how I look at it. Gold market. Gold has come alive. Without today, what you had was a pattern of lower highs and a lower low. I think you'd agree with that. With today, once you cleared this 184.70, you put the market now with higher lows, higher highs. I would expect the pros are going to buy this market as defense if they get an opportunity at the 18-day average. And if you get under 180, 149, I think you got to go back to the drawing table. If the market extends its rally, maybe this is where the market comes up to challenge these highs again. But as I'm going home, the momentum is close, just about turned up. It's certainly no longer oversold. The bias is up and the trend is up. In GDX, same thing. This one, you have turned the momentum to the upside. So here we go with a market that's got higher lows and higher highs. There's something else on the chart. I can't show it here, but if I took off the swing line and I showed this to my afternoon subscribers, you've left this all alone. It's like a reverse island. You've got an area here that's got a gap here, and you've jumped it. If you don't fill that, I think it's quite bullish, because the market's saying you've got a group of people here and they have no out. That gap away, that could set it off. I'm curious to see how that plays out, but if those gaps aren't filled, I think you have to say it's going to be a bullish formation. I rarely see that formation. I'm just guessing as to what it is. In TLT, we've gone from a Bollinger Band top to a bottom. We went in excess of that. We've moved to the right-hand side. You haven't changed very much here. You've got what's called a vertical price break. It never really gave you a higher high day other than today after 1, 2, 3, 4, 5, 6 days from the peak of it. That's quite a bit. Market hasn't changed its overall down thrust. FXE, uptrend, but be careful. The futures are getting overbought. This market, when it reopens, it's at 70.82. Any reading over 70 is overbought. So it's not one of those markets I'd be telling people run at it. This is something that is going to work. Now remember, from overbought conditions, you either correct downward or you embed. So it's going to be very interesting. I'm seeing the market's getting exciting again. I was bored last week and I'm no longer bored. Now I'm excited all over it. And throwing out today, I know I throw out in this video that I do at in the markets, I start off with my trade ideas in the morning, and I was throwing out recommendations all over. The reason I'm showing you this market on futures, not your SPDR ETF, is simple. I think that if you look in the morning at my futures video, you get an idea as to how that's going to impact your SPDR ETF trades. Come on, QQQ, DIA, all of those, TLT, SLV, GDX, they're all impacted by what the futures markets do. And when you get that early in the morning, it gives you an idea that goes hand in hand with my afternoon SPDR ETF video. How do you get it? It's pretty simple. There's an introductory price, $7.95. I price it about what a big Starbucks is. The Starbucks lasts 15 minutes. This is 30 days. And after that, I want 2 Starbucks drinks equivalent, which isn't a big deal for most people. And you get everything. You not only get the videos, you get my special video reports. You don't pay the $2.50 other people pay. You don't pay to come into the live webinar. We just held one yesterday, 73 questions I answered. Loved it. In fact, people asked more questions than they wanted to see charts, which was great because I love to teach them with that. And that's your chance to throw things at me. Hope you throw more charts next time and we'll go through that. But that's how you get it. If you're interested in the SPDR ETF, it's right here as well. So go to Ira Epstein, go to research. It answers everything, and I hope you subscribe. I'm Ira. See you tomorrow.